Welcome back to Trading 360. I'm Nicole Petalides, live in New York City, live at the New York Stock Exchange. Thanks for being with us. So it's time for the big three. 3 stocks, 3 charts, 3 trades. And Ben Lichtenstein will take us to the charts. Here to take us to the trades, Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Thank you both for being here. So I know your first one is Planet Fitness, but I would love a big picture as we see the S&P 500 back above 4,300, and we were worried about 4,200. I mean, at least we've seen some good action lately to the upside. Alan, your thoughts?
Well, I want to build on what the previous guests had talked about. There were a lot of signals last week that were very positive, and obviously we've turned the corner here this week. That was a classic FO move, a fake-out move to the downside is what it looks like now. Now, to confirm that, we've got to fill in that gap up above at 4,400 in the S&P, but we had traded between 4,200 and 4,400 for the longest time, tested and rejected that low as we went below the 4,200 and came storming right back. Last week, we made new swing lows, new 5-month lows 3 times, Monday, Wednesday, and Friday. Wednesday and Friday, we did not make new highs in implied volatility. That was a huge bullish divergence sign that the short sellers were running out of strength, and it was a test and reject, and this is huge the way the markets come back this week, but we still have to fill in that 4,400 gap, and then it should be very, very positive.
All right, so let's look and see what your trades are and if they go along with your big picture. Planet Fitness is first up.
Yeah, Planet Fitness, I'm not a fitness guy. I'm a chart guy. So looking at the chart, this is a stock that's been mostly between 50 and 70 here since May. So the midpoint is important here is at 60. If it can get back to the 60 midpoint, then it should get to the top of the range. Now, there's a lot of positives here. I'm seeing leverage buying, which is very important to me, is what I look for. It's the money flow. Money flow is going into these positions here in this stock that's trading sideways, and there's plenty of gaps up above. There's a gap at 57 to be filled, there's a gap at 64, and there's a gap at 74. Most importantly here is we pushed back above the 50-day moving average, which is a momentum sign to me. So I'm looking to buy an option, buy the $50 call, trading for about $750 for the January option, gives me 3 months of time, and a position from the low with a lot of positives here that have built up on a stock that had a serious, serious drop.
All right, what do you think, Ben, when you take a look at the Planet Fitness chart today?
Well, as always, I'm going to start off with the other side of this one. I do see some recent strength in terms of Planet Fitness, but it looks to me like a longer-term trend to the downside, and this could possibly just be setting up as another sell opportunity. Let me show you what I've got my eye on here, Nicole. First and foremost, high conviction trade on the left half of this screen here. You can see basically from 44 all the way up to 54, and over the last few weeks here you can see we've been a bit more sideways, right, relative to what we had seen. High conviction to the upside, overlapping rotational, so we've transitioned into this balance phase right now. I think that's in many ways very bullish, but we're looking at hourly candles. Let me identify some of the areas of consolidation that the market established for us on the way up, and here you can see, well, Nicole, I think let's just put it this way. This chart, we're going to say, is brought to you by the number 3 today, and I say that because look at these areas of consolidation. Every $3 increment in a very predictable manner, you can see that we formed a new area where we just sort of balanced out a little bit. Let's move away from this chart here, though, because while we're in an uptrend on the hourly time frame, you can see here a bit of a different pattern playing out on the more intermediate. These are 4-hour candle charts going all the way back to the beginning of March. In this instance, this chart today, Nicole, the 4 hours brought to you by the number 15. Let me show you why, because we're talking about an $80 balance that formed around 65, and then we broke down recently and it started to form balance around 50. It looks to me like we might be about to roll over here again and just establish this area of consolidation. I've got one more chart for you here today, and in a similar pattern, a very incremental type downtrend. Look at this. This one's for the $20 moves, 90, 70, and again, currently balancing around 50 here right now in this bigger picture. So downtrend on the bigger picture, bit of an uptrend, but it's starting to lose some momentum as it's gone sideways over the last couple weeks.
All right, thank you for that. Alan, what do you think?
Well, I think Ben needs to pull back out a little bit. If you look at the last 3 years, this 50 level is a super support level to lean on. So that's what I'm doing. I'm looking at a 50 call. I've got a lot of other indicators that have some upside momentum, that we made a bottom base. And if we get to that 64, which is one of the gaps up above, which is a modest move in this stock that's had such a big drop, if we get to the 64, that option gains 100%. So that's the way we like to play.
Right, understood. All right, next up, Snap. Alan, why did this one jump out at you today?
Well, it's been in a range, and it's been in a bottom-based range, and I also look for the same thing, that same bullish divergence we talked about in the S&P, whereas it's made new lows and not new highs in implied volatility. That's a sign that a bottom has tried to form. We've made a triple bottom on this stock that's traded between 8 and 14 for about a year, so the midpoint pivot on this is 11. Now, we've been between 8 and 11 now for the last 3 months, so a breakout of that range targets 14, which is the top of the action for the year. So there's a lot of positives here. I'm also seeing that leverage buying, that accumulation here. If you look at this stock since the 2017 launch, we're down at the base on this stock. So it's about risk reward as well here. I'm looking at the April option, the April $8 call. 8 is the bottom of this range here. It's trading for about 3. We're at 10.25, so it's $2.25 in the money. The expiration break even is 75 cents away. It's got 6 months of time and an 80 delta. I like this setup.
Okay, he likes the setup. What do you think? Do you like the way it's setting up, Ben?
Nicole, Alan, you had me at the pivot being $11. Everything after that, I just lost track of, because in this case, we're talking about a downtrend here. It's pretty well defined. Let me show you what's going on. Shares of SNAP coming off as of recent, and take a look here, because we're actually balancing as we have been and continue to be on this hourly chart, and in this instance it's right around this $9.50 level. As long as we hold below 11, we're in a bit of a downtrend here, so you can see areas of consolidation that formed at lower and lower levels. This is going back to the beginning of July, and again, a lot more recently overlapping rotational than not, but still in a bit of a downtrend here. This is an hourly candle chart. Let's take a step back here. Let me show you exactly what's going on, because this is what Alan was talking about, the significance of this $11 level. If you go back to, well, we're talking April when we were around 786, we saw a nice rally up to near 14, but since, not a lot going on. So you've got a pretty well-defined upper, pretty well-defined lower extreme, and again, even right now, holding below that pivot, that $11 level that Alan mentioned here. Let me show you what's going on with a little bit of a bigger picture, longer-term chart here, and Alan, I'll agree with you in terms of Planet, PLNT, in terms of looking at that longer-term chart, but I was just trying to identify the more recent downtrend. In this instance, very much so the longer-term trend support of this bearish narrative as well. You can see here that we've been in this area of consolidation, Nicole, since the summer of last year, and again, as long as we hold below 14, we're below 11 right now, the pivot, but 14 is kind of the line in the sand at this point, still seeing value form at lower and lower levels here.
Okay, thank you for that, and that's some chart when you're bouncing around down there at the bottom. Alan, final thoughts on Snap, and then we'll get to JD.com.
I think he kind of made my case for me. He says 11 is an extreme pivot. What I'm doing is I'm anticipating a move above that 11 based upon the other technicals I see, that bullish divergence and that money flow, and that move above 11 will be a confirmation. So you can get in now and anticipate the move with limited risk with an option, or if you're a breakout trader, you'll wait till it gets to 11 and then you jump on board, because if it gets above that 11, that's a very, very positive sign. We both agree on that.
Okay, at least you could agree on that part. And last but not least, when you look at JD.com, tell me about this one. Some people don't like to delve into things that relate to China at all. Why is this one a bullish one?
This is risk reward. I don't think I trade. This is risk reward. If you look at China, China is 20% off its high for the year, but it's also 20% off its low if you look at FXI, the ETF that tracks the big China stocks. The PE for that FXI is 10. So these stocks have become unwanted. They've had a big sell-off, a big pullback, let's say. And so looking at this sector, it looks like it's ripe, because I also see that bullish divergence where it made new lows, but not new highs and implied volatility for this stock. JD has had a big drop. It had traded between 30 and 40 for 7 months. Then it broke down out of that range. Now we've been trading between 25 and 35 for 3 months. So what I'm looking here is risk reward. The 10-year low on this stock is 19.21. I'm looking at buying the $20 call. That $20 call for March is trading for about $6.50. It's $5.50 in the money. I see my bullish divergence. I see my leverage buying here on these lows, and a modest move up to 35. Just as the midpoint of the previous range, we tested and rejected this low. If it gets back to that 35 level, that option gains 100%.
Okay. Do you believe him? Is this a possibility, Ben?
I see a downtrend here still, Nicole. I think 34, 35 is a key area right now, but as long as we're below 30 in this instance, we're still in a downtrend in multiple time frames. Let's dive into first the most granular that I looked at. In this instance, the move lower from 42 all the way down to the recent lows around 24. We're looking at hourly candle charts, and this goes all the way back to the beginning of August. You can see areas of consolidation that formed at lower and lower levels, currently bouncing around 25, it looks like. So that's why I say as long as we're below 30, it appears as if that working assumption that value is forming at lower and lower levels is still a valid one, and those that are looking to participate with the trend are looking for short side opportunities, not necessarily longs in this instance. So again, as we move away from this trend to the downside on the hourly candle chart, I want to show you what's going on here because similar pattern playing as I pull up a daily candle chart, and this goes all the way back to the beginning of the year. Areas of consolidation that formed at lower and lower levels with limited rejection. In this instance, you can see again, significance associated with 25, 30. Anything above that would kind of bring this bearish narrative into question, but under these circumstances, no rejection of these lower levels as of yet. Taking a look here, I've got one more time frame because I want to show you what's going on here. We always talk about these phases of development, right? In this instance, a little bit more overlapping and rotational than we'd look for. Not a lot of really well-defined vertical separation between these consolidation areas. But as you can see right now, we're in a bit of a breakout phase to the downside here, Nicole, or in a vertical phase as we take out those lows from last fall. Looks like the market's trying to seek value lower. We're going to wait and see at what point do we get, again, a new area of consolidation, that kind of chop forming around a new area lower. That's what the bears are looking for here. Continuation of the existing pattern, that's been down.
All right. Thank you for that. This is a good one, you guys. Really, thank you. Alan, any final thoughts?
Well, in this case, I'm looking at a stock that I have the ability to be long from essentially 10-year lows. It's way oversold just as the market was. And as the market had bullish divergence, that's what this stock has too. Whereas the sentiment sign, the scariness on the downside has alleviated and you see lower volatility. Volatility in this stock is half of what it was at one time this year. So it's just like what we see in volatility here for the overall market. The VIX is what, at 15 now? 15. We were just at 23. The VIX has dropped 30% in just the last week or so. And that's a very positive sign. And that's what you look for, is that shift in sentiment. And that's what happened in the overall market. That's what I'm looking for to happen in these China stocks as well.
All right. Thank you both very much. Alan Nuckman, bullseyeoption.com, and our own Ben Lichtenstein on those charts. Thank you.